Welcome back to Selling on Giants. I'm your host, Mr. Will, and today we're diving into one of the most overlooked parts of running a profitable e-commerce business, that's bookkeeping. Joining me is Arthur Glinkin, co-founder of S&G Bookkeeping and a tax consultant at Deloitte. Arthur helps e-commerce founders clean up their financials, understand their cash flow, and build bookkeeping systems that scale as fast as their businesses do. In this episode, we cover the most common bookkeeping mistakes e-commerce sellers make, from ignoring sales tax nexus to misreporting Shopify payouts. We also tap into how to track your true cost of goods sold, including tariffs and landed costs. Also, what tools like QuickBooks, Webgility, and TaxJar actually do to simplify your financial setup. And why clean books aren't just about compliance, they're a growth strategy that gives founders clarity and control. So, whether you're a six-figure seller or scaling towards eight, this episode will help you master your money and make smarter decisions in your business. Let's get into it with Arthur from S&G Bookkeeping. All right, let's recap some of the biggest takeaways from today's conversation with Arthur Glinkin of S&G Bookkeeping. First, e-commerce bookkeeping isn't like traditional accounting. Most general accountants miss key nuances like sales tax nexus, platform fees, tariffs, and landed cost. E-commerce requires its own playbook, and if your accountant doesn't understand that, you're leaving money on the table. Second, know your nexus or risk overpaying and underreporting. Your physical presence or sales volume in a state determines where you owe sales tax. Hit $100,000 in sales in Illinois or 500,000 in Texas, and you've got some filing obligations. Tools like TaxJar can automate all that tracking so you can focus on selling instead of stressing over tax code. Third, your payouts are not your revenue. Those Shopify or Amazon deposits you see, they're already net of fees, refunds, and taxes. Arthur broke down how tools like Webgility and A2X connect your storefronts to QuickBooks Online so you can see your true income, not just what hits your bank account. Fourth, don't forget about tariffs and landed cost. If you're importing products, those expenses belong in your cost of goods sold, not as a random one-off expense. Ignore them, inflates your margins, and gives you bad data for pricing and profitability. Next, profit does not equal cash flow. You can be profitable on paper and be broke in real life. Inventory purchases don't hit your profit and loss statement, but they drain your bank account fast. Your statement of cash flow is where the truth lives, so review it often. Arthur also broke down the difference between a bookkeeper, an accountant, and a CFO. Your bookkeeper handles categorization and monthly reports. Your accountant focuses on tax compliance, and your CFO looks forward, forecasting, budgeting, and planning for growth. Knowing when to bring each one in is a game changer. And finally, automation is a tool, not a replacement. QuickBooks and AI can handle repetitive work, but they still need a trained eye to catch errors and interpret what the data actually means. Clean books don't just keep you compliant, they give you clarity, control, and the confidence to scale. So remember, clean books equals clear decisions. That's how you grow smarter, not harder. Arthur, welcome to the show, man. I'm excited to have you on and to talk about a very hot topic, like the unsexiness of running a business is your
Yeah,
financials, your bookkeeping, and everything else. So, really excited to have you come on and educate our e-commerce sellers on some best practices around bookkeeping and general financing. Today's topic is master your money, bookkeeping habits that fuel e-commerce growth. And I'm excited to have Arthur on here from S&G Bookkeeping. So, Arthur, we're getting kicked off. I'd love to know what inspired you to start S&G Bookkeeping and how did you kind of evolve into your current role?
yeah, thank you. All. Excited to be here. So I know we talked about this a little bit before the actual podcast as well, but Daniel and I, we run S&G Bookkeeping. So if you're not familiar with bookkeeping, it's basically accounting. People kind of interchange the two terms, bookkeeping and accounting. But we had a business before. We were in the SEO space where we would essentially outsource all the work to a contractor and Fiverr, Upwork, wherever we would find someone. And that was a complete mess because we had no control of who was doing the work. We didn't even know how to check if the work was heading in the right direction. So Daniel and I, we thought to ourselves, we're studying accounting in school. Why don't we literally just, instead of trying to start this whole new business, why don't we apply what we're learning in school and actually make a business out of it? I mean, I'm a full-time tax consultant at Deloitte as well. Daniel's also at Crow, which is another big firm,
Mm.
working in tax. So we thought we have all this experience. We keep stacking all these skills. Why not just start a business on the side as well? So luckily, our first ever client that actually came, I mean, when we started, we were thinking to ourselves, we're going to work with anyone. We just need some cash. We want more bookkeeping experience, get our name out. And luckily, our first client was an e-commerce client. And I mean, their previous accountant, they had one that was kind of heading out of the e-commerce space. So we looked at the books, and the client told us that he was a great accountant. He had 40 years of experience. And we looked at those books and we're like, if this is 40 years of experience, this is crazy. I mean, I saw so many errors, even though it was our first client that we were looking into. We had that accounting background. So I saw so many errors, and that's kind of where we realized that e-commerce is just a completely different ballgame, because you have sales tax, inventory tracking, cost of goods sold, tariffs, all that. So we kind of realized this is the niche that we can really dominate, make our name, get it out there, and then really become the e-commerce accountant. So that's how we started, and that's kind of the direction that we're heading at right now.
Man, I love that too. And it's like your main gig is your 9 to 5 support and your 5 to 9. So that is really
Yeah,
cool. And
yeah.
you guys work for really top-notch agencies. So I'm sure what you learned at Deloitte and Crow is obviously spills over. Before I get into the main topic, what made you choose e-commerce? Was it just faith and coincidence that e-commerce brand came over, or were you guys dabbling in the e-commerce realm before that?
So I'm not gonna lie, it was mostly just a coincidence because, I mean, e-commerce, we got lucky with that first client that
Yeah.
she actually reached out to us because we passed her QuickBooks Online exams, put our name out there, and she found us online.
Oh, that's cool.
But then, obviously when you're starting the business, I know I listen to a lot of Alex Hormozy, and he's always talking about this, niche down, pick a one avatar that you want to
Yeah.
target. And that was tough for us because, I mean, we just want to take on anyone. If like a family friend has someone that needs their books done, we wanted to say yes.
Yeah.
Um, and we did in the beginning. We took on a couple of different
Mhm.
clients, but now after actually working with some of these e-commerce brands, like even just for my sake, I realized, man, there's no way I want to learn, because I'm sure each niche has its own little
Oh,
specifics. Like I know construction can be very difficult with job costing, different
yeah.
construction projects and so on. If I have to learn this much to become an e-commerce expert, I can't imagine going through another learning curve like that, to learn construction or another niche that could just be a complete pain if I have no idea what I'm doing. So
Exactly.
take down, yeah.
My business coach told me when we started, the riches are in the niches. So like
Yeah,
the
yeah,
more
exactly.
niche down you could get, the better. And but
Yeah.
we love e-commerce brands. Obviously, we serve the same customers, so they tend to be fun to work with, and there's always interesting projects. So awesome, Arthur. Well, appreciate it. It sounds like you have a lot of experience with working with e-commerce brands. So let's jump into the main topic: bookkeeping habits that fuel e-commerce growth for sellers. So on that note, what are the most common bookkeeping mistakes you see e-commerce brand owners making, and what are some tips to avoid them?
Yeah, I mean, there's a lot because, like I mentioned, e-commerce bookkeeping and accounting is just a different animal compared
Yeah.
to your typical chiropractor down the street. So, there are a couple things that I've noticed. I think there's three or four that I'd like to talk about. Number one is sales tax, like
Mm.
not having a system in place to actually track your sales tax. Because if you're not familiar with how sales tax works, the customer pays you the sales tax, and you're typically responsible to remit it to whatever state they're from. And
Yeah.
obviously, there's a bit of nuance if you're selling internationally and so on. Luckily, if you're on a marketplace facilitator like Amazon or Etsy, they actually collect and remit that on your behalf, so you don't have to worry about that. But
Nice.
um, I know Shopify sellers, for example, some of our clients, they get confused with that. Shopify is not a marketplace facilitator, so that's where you kind of have to track your own sales tax, and
Interesting.
it gets even more confusing because you don't always need to, only when you have a nexus. But I don't want to
I was
get
gonna
too
ask because
technical.
we
Yeah,
have Nexus with hiring people from other states. So in e-commerce, if I sell in Missouri, because I'm in North Carolina, do
yeah.
I need to have Nexus in that state? Is that something you guys do for all the e-commerce brands, or is there like some type of national thing that allows you to sell in all the states or
So
federal?
there's when you talk about nexus, essentially what that means is a connection to a state. And if you have that nexus in a state, that's when you actually have to start collecting and remitting sales tax from customers in that state. And you bring up a good point with your employee, because there's two ways that you can actually get this nexus.
Hmm.
Number one is physical. So if you have a physical presence in a state, employees, warehouses, inventory, anything physical, from your business in a certain state, if you're in California and you have an employee in Missouri, like you mentioned,
Yeah.
that's a nexus right there, and you have to start collecting sales tax. The second part of that is an economic nexus. So
Mm.
even if you have no physical presence in Iowa, whatever it might be,
Yeah.
but you have enough transactions, enough sales within the past calendar year in that state,
Oh, interesting.
that's when you hit your economic nexus. So for most states, it's about $100,000 worth in sales in the past 12 months, and then you have to start collecting. But
Oh, get
yeah,
out of here. The
yeah,
threshold's interesting. So as an
yeah.
e-commerce brand, if I sell in Texas, but I sell less than $100,000 in the calendar year, technically I don't have to file Nexus, but I'm still responsible for those taxes when you guys do the books essentially.
So technically, if you don't have a nexus now, Texas, I mean, everything's bigger in Texas. That
Yeah.
threshold is actually $500,000 worth of sales. So
Oh, cool.
a
All right.
lot more than your typical $100,000. Like in Illinois, I'm out of Chicago, it's $100,000.
Yeah.
Um, if it's funny you asked this because I've literally called probably like 10 to 15 states just with their talking with the Texas Department of Revenue, Illinois Department of Revenue, trying to figure this out because I mean in the US there's over 11,000 different tax jurisdictions. So I
Wow.
mean, I don't care how good of an accountant you are, you're not gonna be able to
Yeah,
memorize
no
that.
way.
So. And that's where systems like TaxJar, certain softwares that we're going to talk about, I'm sure, they help play in with this because, I mean, if you could pay, 30, 40, $50 a month to get all this taken care of for you, then, I mean, I don't understand why you want to do that, right? So,
Yeah.
but essentially, if you don't have a nexus, technically you have no obligation. You're not required to collect sales tax from customers in those states. So,
Interesting.
that's kind of, yeah, broad
So let's talk about,
analysis. Yeah.
didn't mean to interrupt. Let's talk about this sales. So what are some of this? So you mentioned Nexus, which was really interesting. TaxJar, QuickBooks, do they all do the same thing? It's like it will know I'm an e-commerce brand, I'm on Shopify,
Yeah.
it's tracking all the sales. Does the bookkeeper or accountant need to look at it and say, oh, we passed the Nexus, or does this TaxJar system will flag it and say, hey, economic, you guys need to start paying and collecting taxes? Like, I guess
Yeah.
how would
Yeah.
you manage that if we were working together?
Yeah, so I think that does tie into the importance of having an e-commerce specific account because like I mentioned with our previous client, the first client that we actually signed, I'm sure that guy, I mean, he has way more experience in the space than I do, but if you're not specifically focused on e-commerce, there's so much that you
Mhm.
can miss. So I think as an e-commerce accountant, that's something that's you're responsible of keeping track of for your clients and understanding. So yeah, technically, if you use TaxJar as a software that it's dedicated specifically for sales tax, so you
Mhm.
just hook up your sales channels and it tells you exactly how much sales tax and even how many sales you've gotten in each state. And I think that knowing how to use that as an e-commerce accountant, that's something that can separate you from from your everyday accountant. So the cool thing with TaxJar is it actually has a Nexus tracker, so it has a little report that you can run. Well, actually, it's pretty cool. It's like a map and then you
Mhm.
click on the map and it shows you where you've approached your nexus in a certain state. So you could look at the map and say, okay, we have no presence in Florida, but we're at $100,000 worth of sales. So it'll let you know, and that can help you prepare, for your sales tax filings, because that's another thing you have to actually do is file your sales tax returns every certain amount of time. So that's where TaxStar steps in.
Yeah, pretty cool. So I know we went a little off topic.
Yes.
It's like Nexus is something I hear a lot about with my accountants, and now I have a lot better understanding of why we pay Nexus. But what are some of the more common mistakes? You said you had three or four. I'd like to get those out before I I take us
Yeah.
down another rabbit hole.
Yeah, for sure. So I'll try to give, more of a broad overview because like I told you, I'm an accounting nerd. I can talk about this stuff forever. But basically, another thing that we've noticed when we're onboarding clients, especially if they're doing their own bookkeeping, is let's say you get your payouts from Shopify every couple days or whatever your payment setups are. Um, if a lot of them can actually recognize that deposit as revenue for the business, and that's incorrect because
Mm.
Shopify will only pay you after they take out all their payment fees, after they make the split between your actual shipping income and any sales income. So if you're selling a product for $40, but you have another $5 of shipping income, that's something that you should be tracking separately on your profit and loss just to give you more information. And
Mm.
also, like I mentioned, the fees, Shopify fees, that deposit is a net of all those things: shipping income, sales income, any fees, sales tax as well. So you want to make sure that you have another software like Webgility, which I'm sure we're going to talk about as well.
Yeah.
And it basically makes that distinction between, this is my revenue, this is my shipping income, this is how much I actually got paid out after fees and so on. So that deposit is a net amount. It's not your revenue that you should be tracking. And then in addition, I think this is super relevant right now is tracking your gross margin because obviously with tariffs nowadays, a lot of our clients they get inventory from China and obviously China they got hit or the tariffs from China are pretty high. So what most e-commerce owners don't know is those tariffs, it's not just an expense for your business. They should actually be factored into the cost of goods sold of all those items.
Okay.
So basically if you have the simple example, if you have 5 items at $1,000 each, pretty expensive items, but just for the example,
Yeah.
and you're paying a $500 tariff on that, since each item makes up 20% of the total cost, so 5 times 1,000 equals 5,000, that $1,000 product is 20% of the total purchase. You have to allocate 20% of that tariff to the cost of that item as well, which increases your cost of goods sold and decreases your margin. So if you're not keeping track of that, then obviously your gross margin is going to be higher than what it really should be, and throw off your pricing for your products as well. And then the last thing I would touch on is the fact that your net income does not equal cash in the bank because
That's a good one.
that's kind of where your statement of cash flows and having an accountant that actually can understand all those financials comes in because your net income, I mean, think about it. If you made technically $50,000 net income for the month, but you spent 30,000 on inventory for the month, obviously that 30,000 is not an expense on your profit and loss. It wouldn't show up in your net income, but it's still 30,000 that you spent and your bank account is $30,000 less. So
Yeah.
that's where you have to look at your statement of cash flows and really understand I made this much for the month, but why do I only have this much in my bank? So
Makes sense.
that's kind of what I would say the top 3 or 4 are for e-com owners.
That's pretty. So it's like nexus and knowing when to pay taxes. It's understanding all your fees, right? Because it sounds like a lot of sellers don't always understand what they're paying and how much they're paying.
Yeah.
What was the third one?
Third one was actually accounting for tariffs in your cost of goods
Oh,
sold.
accounting for
Yeah.
tariffs in your pricing. And some really good tips there too, because obviously, like, well, I guess I'll state the obvious, but why would you want to show less profitability on your net on your income statements?
Well, obviously you want to pay less tax, right? So
Yeah.
you want to, that's kind of a fine line because you obviously want to pay less tax, but you also want to understand how your business is performing. So
Yeah.
yeah, obviously everyone wants to pay less tax, but as an accountant, I'm not going to tell you, do this and
Yeah.
reduce your tax liability, right? I would rather have you actually understand the numbers
Yeah.
behind your business and then use those correct numbers as opposed to the incorrect numbers to make decisions as well. So
Yeah.
that's kind of where I'm at.
And it makes a ton of sense that being in the marketing side, what I see, it always we've worked with some really large brands and them not knowing like their landed costs because it's just
Yeah,
like,
yeah, that's the term actually, landed cost.
yeah, that but sourcing in like there's so much that could go into it. So I guess I'd love to ask about that. So more complicated products, like let's say I'm making exotic supplements that have all these raw materials from all over. How
Yeah.
would a supplement brand, how do they manage all that cost of goods sold? Do you guys track that as part of bookkeeping, or like how does something like that factor into what you guys do?
Yeah. That's actually a good question because one of our clients, they manufacture their own supplements. So when you think of e-commerce, for the most part, you're thinking, okay, I source my inventory from China and then I resell it at a certain margin. But they actually manufacture their own products, which is, like I said, not your typical e-commerce.
Yeah.
But that's when the cost of goods sold gets a little bit more complicated because your cost of goods sold when you're manufacturing products, it depends on 3 things. Number one is raw materials.
Yeah.
What is the actual cost of the raw materials that you used in manufacturing those products? Number two is direct labor, because
Mm.
if you're paying, factory worker, whatever, in the factory, $20 an hour, and they're spending X amount of hours producing that specific product, their salaries and wages should be included in the cost of that product as well.
Mm.
And then the third part is variable overhead. So obviously, if you're in a factory, you're going to have utilities, you're going to have lighting, gas, and so on. You have to basically, I mean, this gets a lot more complicated than your typical e-commerce, but you have to basically take a portion of that total overhead cost with the utilities and so on, and then add that to the cost of your actual items as well. So in QuickBooks Online, that's the primary software that we use for our clients.
Okay.
It's a bookkeeping software. It's not that complicated when you're not going to be able to track direct labor, direct variable overhead, and direct materials or raw materials as well. But luckily for us, since they're pretty small, they have one person that does their helps
Right.
with their manufacturing. So it's a lot easier. We mostly just count the raw materials in their cost of goods sold.
So
So
they're giving you the final cost, and then you just kind of put that across the products appropriately, essentially, and then you're able to
yeah,
make sure we have accurate books, essentially.
yeah, exactly. I mean, it's a lot of communication with the client because they get super detailed. I mean, they know exactly, I'm putting 1.2 ounces of
Mhm.
XYZ into this, and they keep track of all that cost. Obviously, I can't keep track of that because I'm not in the factory. I don't know
Yeah,
exactly how much is in there. So that's kind of the communication between the client and the accountant really comes in. And whatever information they give me, that's kind of where we make the entries into QuickBooks Online. So
beautiful. And I did want to share that just so our listeners can understand, like, it could get really complicated depending on if you're the
yeah,
manufacturer, a reseller, a brand owner, and there's all types of things or considerations as you're making sure you're profitable online. Um,
yeah.
my next question for somebody just starting their store, what are like the first three things they should set up in their bookkeeping systems to set themselves up for success? And I know you mentioned a few softwares. So I'd love to,
Yeah.
if you call any of them out, tell us what they do.
Yeah, for sure. So number one is actually set up an accounting software, whether it's QuickBooks Online. I mean, that's the one that we prefer because I mean, it's our like our bread and butter. We work. I mean, it's the most popular software out there, right? Um, I have talked to this company called Finaloop or Finaloop. I don't know exactly how you say. I don't know if have you heard of Finaloop
No, I
before?
haven't heard of
No.
them, but
Yeah. So it's basically QuickBooks, but it's specifically for e-commerce
oh,
because
okay.
they're made to integrate your sales channels and so on. Haven't worked with them before, but I know that's something that we might be considering with,
Nice.
future clients if we onboard, try now find the loop and see whether it's worth it to make the switch. But when I say set up QuickBooks Online, there's two main things that I'm talking about. Number one is basically setting up your chart of accounts. Now, your chart of accounts, it's basically a list of all the accounts that you're going to have on your profit and loss balance sheet, and your main financials. So things like inventory, sales or product income, refunds, discounts, all of those are items that you want to see on your profit and loss to give you more detail. So when you're starting out, you're not even going to know what a chart of accounts is, right? So as you make sales and you kind of understand where you're spending money, what types of expenses, what types of income you're having, that's when you can actually start adding specific chart of accounts. And I'm not gonna lie, if you really wanted to, you can just go on ChatGPT, give me a sample chart of accounts template that I could use for my e-commerce business, and
Yeah.
that's something it'll help you, give you the right information you need to input. And then number two is actually setting up your bank and credit card accounts because in QuickBooks Online, the thing I really like about it, is that you can basically connect all your bank and credit cards,
Mhm.
and every single transaction from those accounts gets automatically funneled into QuickBooks Online, and you just press the transaction, pick the account. This was office expense, whatever, and I paid it to Home Depot, whatever. And it's super easy just to categorize those transactions
Yeah.
in your bank and credit cards. So I would say number one, set up QuickBooks Online, and then number two is, I think we mentioned it before, but it's some e-commerce owners, they have an issue getting their sales into QuickBooks Online just because of, I mean, if you're having a lot of volume of sales, how do
Yeah.
you actually connect QuickBooks Online to your sales channel? So we use a special software called Webgility. I know
I heard.
A2X, you've heard of it before?
Yeah, I know
Okay.
Webgility. Yeah.
Yeah. So A2X is another competitor out there. We've just used Webgility since the beginning and we've liked it. So, but that basically helps you connect your sales channels, Shopify, Amazon, Etsy, wherever you're selling on, to QuickBooks Online. And the thing I really like about it is it automatically, once you go through the setup process, it automatically maps all of your accounts to the specific chart of accounts that I just told you to set up in
Yeah.
QuickBooks Online. So that's where that chart of accounts comes into play because WebGility is going to have an option. It's going to say, where do you want sales mapped to in QuickBooks Online? You want it mapped to the sales account. Where do you want refunds mapped to? Refunds and so on. So you just want to basically match the two accounts between WebGility and QuickBooks Online. And the cool thing with that is that it keeps track of your inventory as well. So anytime you get a sale, anytime you get like I said, a sale, and then you obviously, for example, you reduce your inventory by one, that's going to be tracked inside of QuickBooks Online as well. So you have up to date inventory numbers in QuickBooks Online. So if you want to go look at QuickBooks Online and see how much of this specific item do I have right now, you could do that with WebGility importing all those transactions.
I like that it
Um,
connects it too, because I know if from somebody who had to clean up years of statements from when we got a real bookkeeper,
yeah,
it can be painful. But once it's set up and a lot of that's automated, at this point, our bookkeeper calls internally, it's like 15-minute call for like one-off
yeah,
payment. So I'm sure it makes it just as easy for your e-commerce brands once you set up Webgility and you have the tagging or the categorization set up, I'd imagine it, you still need a bookkeeper, somebody still needs eyes on it, but
Yeah, yeah,
makes it a little easier on you guys, correct?
yeah. I mean, I think we talked about this before, but you can have all this AI automation done for you, but you still need someone looking over. And the thing that QuickBooks Online has an auto add feature where you can set this categorization and have it automatically add your all those categorized transactions into the books
Wow.
without me even looking at it. I never do that because I'm just, as an accountant, I'm super picky. I want to make sure that these transactions, okay, they're probably 95% right. But
Yeah.
that 5% that's wrong, I don't want to get that wrong for my client. So I want to double check, make sure that I actually have eyes on it. And I know at this point with all my clients, I know exactly what I'm looking out for, where each transaction should go to, and then I can give that final confirmation. So yeah, you're right. You do need eyes on it, even if it's pretty automated for you.
And you just brought something up. I'd love for our audience, because we have a wide variety of business owners at different phases of their journey. Can you just tell me, like, what a bookkeeper, what exactly is their role? When do I need an accountant? When do I need a CFO? Are there
Yeah.
growth markers for these e-commerce brands? But like specifically, like what are their jobs and how do they work? How does the finance side work together?
Yeah. So I think that's a good point because when I talk to e-commerce owners or business owners in general, to them, CFO, accountant, bookkeeper, it's all the same thing. But
Yeah,
I think that
it
it's
is to
important
me
for
too. So that's why I'm
us.
asking.
Yeah. So it's important that we make this distinction because your bookkeeper, when you think of bookkeeper, it's typically someone sitting in QuickBooks Online. They're categorizing all your transactions. They're reconciling your accounts to make sure that QuickBooks Online matches up to your bank statements. For us, for example, we're also producing monthly financial statements for our clients. So we send out statement of cash flows, balance sheet, profit and loss. Those are the minimum three that you should be looking at. And then
Okay.
depending on client needs, we can add some reports as well. But basically taking care of the day-to-day back end stuff that all the businesses need. And then we usually, when I hear accountant, people are thinking taxes, right?
Yeah.
So that's the distinction between us as bookkeepers and potentially your tax accountant. Obviously, I work at Deloitte, so that's kind of the goal long term to get into the tax consulting, tax compliance
Mhm.
side of thing. But typically, your bookkeeper, they're not going to be touching anything with tax. They just
Got it.
take care of everything on the back end, and then you would offload that work to CPA or enrolled agent. Those are, CPA. Everyone knows what a
Yeah.
CPA is. So um, they're typically the ones that are taking care of your tax returns for you. And then the CFO, that's a good one because usually as accountants, we're focused on everything in the past.
Yeah.
What happened this month, what happened this year, how are we going to report this? CFOs as the chief financial officer, you should have a good accounting background to understand the financials. Do they make sense month over month? But you're also going to be looking a little bit more to the future. You're going to be trying to set budgets, set forecasts,
Mhm.
that sort of thing, and trying to help predict what is cash flow going to be like in the next couple months. Do we have enough cash to invest in inventory, try out this new vendor, and so on? So that's kind of the distinction between your accountant, bookkeeper, and then your CFO. So
Interesting.
yeah, good question. Yeah.
Yeah, Arthur, thanks for breaking that down too. That's helpful. So I'm gonna spit it back at you to make sure I understand it. But your bookkeeper on the ground, they're making sure everything matches and it's good for taxes and for your accountant. I love this analogy. Your accountant is backwards looking. So they're looking at the year and they're like, yep, this is what you owe the man. This you're
Yeah.
profitable, whatever. Like this is the health of your business essentially.
Yeah.
The
Yeah.
CFO, they're more forward thinking. So they're looking at investments and future cash flow and like how
Yeah.
we could be strategic to get to whatever our business goal is for that year, quarter, whatever.
Yeah, exactly. Just looking backwards versus looking forward. And I do think that, if you have that both accounting background plus the CFO background or just finance background in general, I think that's where, an accountant can really level up their skills and, not just tell you what happened in the past, but also help you looking forward as well. So that's something that we're doing a bit of cash flow forecasting for clients. That's a bit of a different ball game than your
Yeah.
typical accounting. Like when it comes to accounting and bookkeeping, we'll take care of you, no issue. But
Yeah.
cash flow forecasting, looking into the future, that's why you see all these guys on Wall Street. If they get it wrong 99% of the time, it's fine. But that
Yeah.
1% of the time they get it right, it's the jackpot. So
Yeah.
that's kind of the difference between the two of them.
That's
So
pretty cool. I like the Wall Street too. You're right. You only need to get it right once, and that's it. You'll be buying
yeah,
a Cayman
exactly.
Island somewhere.
Yeah.
Awesome. Well, we covered a whole bunch. I do have a few more questions, and I know we're tight on time, so I'm gonna pick up the best ones from this.
Yeah.
So you mentioned cash flow. Cash flow is king. How should e-commerce founders think about cash flow differently from maybe a traditional brick and mortar business?
Yeah. I mean, you're right. Cash flow is king. And the reason for that is because, if you're a service-based business, for example, you're not investing thousands, tens of thousands, maybe even hundreds of thousands of dollars in inventory at a single time. Obviously, there's different complications with service businesses, but when it comes
Yeah.
to e-commerce, especially if you're going to be buying from China, Vietnam, one of these, countries that's, not necessarily local to you, you're going to be waiting a month, 2 months, 3 months. I mean, I've had clients that wait 6 months for their inventory from the time they put in their purchase order to when they can actually get a return on their money. So that's the thing with inventory. If you're going to be spending thousands of dollars on inventory, you might literally have to wait 6 months in order to get your first dollar back, right? So that's kind of where you have to analyze your cash flow. You have to understand, okay, this is our net income. This is how much cash we actually have. Will we have enough cash until we get that return on investment, that $1, that first dollar we can get back after 6 months? So it's basically analyzing your financials and saying, do I have enough cash to keep myself afloat until I get all this inventory back on hand? And then obviously keep the sales going. And I mean, the importance of having inventory on hand, not just because of that one item, but because if you lose that one item, you could lose an entire order.
Oh
So
yeah.
I'm sure you have some good experience with that, but
Yeah, definitely. You could fall behind on like all your marketing work too. So all your
yeah,
at least on marketplaces. So we hate running out of inventory. But it's interesting. You do the financial forecasting. Do you do demand forecasting as part of it? Do you help them? Like, is there a predictive analytics that's part of? Because forecasting's hard. I do it a lot in advertising. So I'd love to
yeah.
hear your perspective based on your experience.
Yeah, and I think there's two ways that I could talk about this because number one, obviously understanding QuickBooks Online and the reports that they have. Yeah, it's good to have the reports, but if you don't understand how they work and you
Yeah.
can't explain it to a client, that's where the issues, not necessarily issues, but there's no added value as an
Yeah.
accountant there. So what we like to do for some clients as well, if they're worried about demand forecasting, is you can literally just go pull the sales by product or service report in QuickBooks Online and analyze your performance of each specific item over time.
Mm.
And what we like to do as well is that the second part is actually comparison reports. So
Mm.
every single month, with e-commerce, obviously there's waves, down,
Of
ups and
course.
downs when it comes to your sales because if you're selling during the Christmas time, New Year's, obviously you're going to have a big spike. So when we're reporting to clients, we don't necessarily report here's November versus December. What we like to do is say this is December 2025 versus December 2024. And that
Mm.
gives you more of a, apples to apples comparison
Yeah.
because even if you're killing it in 2025, maybe your December month in 2024, just because of the holiday season, it
Yeah.
might be better than, November 2025. So
Yeah.
I think that it's important that you actually understand the reports that you have, and then you can actually explain that to clients. So that's something that we do as well.
That's a really good point, and it's definitely something to consider. It's like because we'll look at month over month data, but year over year is more accurate because it eliminates seasonality. So,
Yeah, exactly.
no surprise, October is not going to be as well as November, December due to, depending on the product. But yeah, that
Yeah.
makes a ton of sense. Um, what role do tools like QuickBooks Online and integrations with Shopify, Amazon play in simplifying bookkeeping for online sellers? So, how does all this software, your software suite, how does it make e-commerce sellers' lives a lot easier?
Yeah, well, if you're going to be the one that's doing your own bookkeeping, I mean, I 100% recommend having a software like QuickBooks Online because I know some business owners that if you're super small, maybe it makes sense, but you just have an Excel sheet. But I mean, the way I see it is, QuickBooks Online, depending on the subscription you get, you're going to need inventory tracking, which is about $100 a month total for QuickBooks Online. I see that as an investment because I mean, you could literally do everything from your business A to Z in terms of accounting. Categorize transactions, reconcile accounts, run the reports that you use to make decisions on your business every single month. And like I said, if I think that's a simple investment to make because unless you're some Excel wizard, which I'm pretty good at Excel, but if we have a client that refuses to go on QuickBooks Online, and I know other accountants are like this as well, we just won't work with them because
Yeah.
that's what we spent our time learning. That's what we know gets our clients the best results. And just having that ability to actually have a software that can take care of all it for you is just, I mean, $100 a month for that. It's an investment in your business. So That, I mean, obviously with our clients, our goal is they don't even have to touch QuickBooks Online or
Mhm.
anything like that. It's basically hands off. Every single month there might be a new transaction or vendor that we have to confirm with them, like one-off transactions, like you mentioned previously, with your bookkeeper. But yeah, I mean, especially with the volume of transactions, the complexity of e-commerce with sales tax, shipping income, all those different splits, refunds, discounts. I don't see how you could do it without a software like QuickBooks Online and Webgility integrated because yes, it might cost you a couple $100 a month, but it'll literally save you hours every single
Yeah.
month. So
Time of your money, right? And
yeah,
I'll just like QuickBooks. I'm in a lot of agency owner groups. I work with a lot of e-commerce. QuickBooks sounds like it's probably the easiest to pick up, and there's so many accountants and bookkeepers that have experience, so it seems like it's
yeah,
probably the easiest and most cost-effective one to pick up and get help when you're ready to hire for help for sure.
yep,
I got one more question. I want to get a little more detailed, kind of for some of our more advanced sellers on here. Um, so with that being said, how can e-commerce operators use their P&L and balance sheet to make smarter investments, whether it's through advertising or inventory decisions?
yeah. So a lot of this is it does tie into marketing, for example, because when you're looking at, okay, this was my advertising spend for the month. What was my actual cost of acquiring a customer? Now,
Hmm.
as an accountant, I'm not going to be that marketing guy and tell you this is the exact metrics that you should be looking out for in your, lifetime value versus cost of acquisition. But what we do help you as accountants, and if you don't have an accountant, you could analyze yourself, is actually tracking your return on your advertising because obviously if you're spending more on ads, social media marketing, whatever it might be, you're hoping to see that revenue number go up for you as well. So actually understanding how much you spent versus how much that's gotten back to you, I think that's super important. And as much as I'd love to give you, specific numbers when it comes to the marketing, what
Sure.
your average should be, I'm not a marketer, I'm an accountant. So
Yeah.
that's, I think, where marketers and accountants can kind of go hand in hand and work with each other because I mean, you have all the metric. You have your ROAS, return on ad spend. You know exactly how many new leads you got as a marketer. Um, but that's something that I think accountants can play a supplemental role and kind of explain to you this is how much you spent and this is the growth compared to the previous month where you only spent this much as well. So I think if hopefully that answers your question
Yeah.
because I'm no marketer, but I can explain the numbers to you as well. So
Yeah.
that's the main kind of task of an accountant, I would say.
This it seems like marketing and finance in general, accounting, bookkeeping need to work hand in hand. In my experience, owning a business as well as working with a lot of these businesses,
Yeah.
finance approves budgets, and a lot of times when we're uh, pitching budgets, we're pitching a return with the budget. So a lot of times it's like, give us
Yeah,
this, and we think we can do this, and
exactly. Yeah.
that's generally how we work together. One last question, and I want to talk about S&G bookkeeping. How do you feel about debt? So I know that as a business owner, there's lots of ways to think about cash flow and financing. What are your opinions about business owners who maybe use debt as a way to get inventory or to get started, or they're willing to take on debt in general? Do you have any
Yeah.
advice, or how do you look at it from a bookkeeping perspective?
This is an interesting one because we have clients that one of our clients literally just took out like a $50,000 loan, which is huge for them. I mean, that's
Yeah.
like they told me they took out a loan. I thought what, $5,000, $10,000, and then they $50,000, which for some sellers is nothing. If
Yeah.
you're a 7, 8 figure seller, high 7 figures, it's nothing for you. But for them, they're kind of a mid 6 figure, so that was a pretty
Okay.
big loan for them. And then I have another 7 figure client that say they will never take loans. They will never take that out because they had some sort of issue before we even started working with them, but essentially they they just hated being on the hook for money
Mhm.
that wasn't theirs. That kind of gives me those two perspectives on the situation because I think it depends on your business. If you're in that scale phase where you just need inventory, you need to invest in marketing, grow your business, I think it makes sense for you.
Yeah.
And for them, for the smaller clients that I just mentioned, I do think it makes sense for them because if it allows you to get all the inventory you need, and you have kind of a safeguard, obviously you're going to be paying interest on but for now, you're basically funneling your scale, you're funneling your growth, and I think for them it's working. I mean, their sales have been crazy over the past, I mean, compared to just a couple months ago. So I think in that case it does make sense, but it depends on your view as an entrepreneur as well. Because
Mhm.
if it's not something that you're willing to invest heavily in and take the risk, if you've already got a business that you're comfortable with, obviously we want to keep growing. The way I see it is, Mosey talks about it. If you're stagnant, you're dying, right? So you
Yeah,
always want
amen
to
to
be
that.
growing.
Yeah.
Um, but obviously, I mean, if you have wife and kids and stuff, mortgage, you got to pay,
Yeah.
that there's a lot of other things that you have to take into consideration. But I think that if you're at a position where you're ready to scale and you have the infrastructure set up, you have your product style down, you have your marketing plan set up, then I do think it makes sense to take on debt for your business.
I like it. And yeah, are there any, so my experience with debt, it varies, but we've taken on debt for hiring and stuff. And we use lines of credit. So any advice to entrepreneurs seeking financing, lines of credit are great because you don't pay interest unless you take it out. So you can have cash available without actually having to swipe a credit card. And then the other thing to be aware of, I've worked with entrepreneurs that took out predatory loans with like super high
Mm.
interest rates. You start
Sure.
paying
Yeah,
right away, which is pretty crazy. And I've seen that cause a lot of issues, as well as I've seen sellers take on big loans for inventory and not actually be able to move it and cost them high
yeah,
storage fees and all types of issues. So, to your point, debt can be crazy, and I think as an entrepreneur, we are accustomed to a little risk, but there are good things with debt, and there are
yeah,
ways to be cautious. But anything to add to that? I'm sure you've seen entrepreneurs put themselves in sticky situations. Sometimes you get desperate when you need cash.
yeah. Yeah, I mean, I will say, like, for example, one of our the client that I just mentioned that took a $50,000 loan, um, their loan is through Shopify, so they have Shopify Capital loan. So I think
Right.
that having that, and the thing I do like about that is it's not a predatory loan, obviously,
Yeah.
but you basically pay that off as you go. So the more sales, I think it's about 10%. They take out 10% of all
Oh,
your sales,
interesting.
which I think is, I mean, if you're selling on Shopify, that's something that's
Yeah.
it's tailored for smaller businesses as well because you take a little bit longer to pay off, but you're still only paying off as you get sales. So it's not
Yeah.
putting you in a difficult position to repay that and take desperate measures. Um, but yeah, I mean, as an accountant, I do think obviously it comes down to your cash flow. Will you have
Mhm.
enough cash to pay off that extra interest payments? And that's something that you should talk about with your accountant because interest it's
Yeah.
it can be dangerous, so
Yeah, it can. It
you gotta
totally
be
can.
careful with that.
But there's two
Um,
sides. That's what I thought was interesting. And you gave a great example. There's I've worked with entrepreneurs who are like, never, I never take out any debt. And the other entrepreneurs are like, yep, um, I'm this much in the hole and I don't care. It's the normal ebbs and flows. So
yeah,
it's really interesting. People have I feel like you have a Dave Ramsey camp where it's like save everything. And then you get more Alex Hormozy who's like, if you can
yeah,
burn it, it'll make you
yeah.
more money in the long run. So, uh,
Yeah.
I love getting the accounting perspective. So thank you for that. That was interesting. All right. We covered a lot and we're running out of time, but I do want to talk about S&G bookkeeping. So I love to talk about onboarding. So I'm an e-commerce brand. I'm a supplement. I'm whatever I am. I'm
Yeah.
coming to work with you guys. What do the first 90 days look like? Like what do we do together? What do you take me through? How do you learn about my business? And kind of what does that experience look like?
Yeah. So good question. So obviously number one is we have an onboarding call. So once, we get the engagement letter signed, ACH, protect both parties,
Yeah.
the legal stuff, we have to take care of that, of course. But we have an onboarding call because during essentially the sales call, we run a free audit for clients. And then that kind of helps us show any issues that they might be having inside their books. And that does help us learn the business. But I mean, like I mentioned, e-commerce, there's so many complexities that it does take a little bit longer for us to just sit down and understand what types of needs they have in terms of accounting, what types of sales channels do they have, are they tracking their sales tax liability, and so on. So that call, it's about 30 to 45 minutes, could be even longer depending on the complexity, but that just helps us actually understand what we need to do. And then we have an onboarding checklist. So, I mean, it's pretty standard for e-commerce. We need access to your sales channels, bank accounts, credit cards,
Mhm.
QuickBooks Online, obviously. Any lines of credit that you might have, we need access to all that to help us do the monthly bookkeeping. So it's pretty streamlined. You just give us access to that. And then after that, like I mentioned, we try to have this hands off. We don't want the e-commerce owner touching QuickBooks Online.
Right.
And this first couple of days is depends if they need a cleanup. If they've been keeping their books clean, obviously that makes it a lot easier for us to just pick off where they left off and then keep going. But I have noticed almost every client that we onboard, they're going to need to clean up
Yeah.
because either they were trying to do their own books and they have no idea what they're doing, or
Hmm.
their previous accountant was doing it, but they're not an e-commerce accountant.
Yeah.
So that's when they need to clean up. So our goal in that case where you need to clean up is we try to get you a first win. So let's say we're cleaning up since the beginning of 2025. What we like to do is we're going to get your beginning balances as of January 1st, 2025. That's super important because I know it's kind of technical accounting,
That's
but if
it.
your numbers as of January 1st, 2025 are incorrect
Oh, it's
on
gonna
your balance sheet,
cascade. Yeah.
exactly. Literally every single number after that will be incorrect. So
Yeah.
we need to get those beginning balances set correctly. And then within 10 days, we send you a full financial analysis of that first month. So January. So we're going to send you statement of cash flows, balance sheet, profit and loss, and any other reports that you might be wondering about. We're going to send that to you within 10 days. So you can actually see what type of work we do. And then based on your needs, you can give us suggestions that we'll implement going forward as well. So we
Nice.
just, we want to give quick wins as soon as possible. And once we have that first month down, you're going to notice that it's pretty consistent month to month. Obviously, there's a couple of transactions and vendors that might be pretty new, but that'll let us, once we get that first month down and cleaned up, that's going to allow us to clean the rest of them much faster than that 10 days. So it does obviously come with communication with the client, understanding how they want, because if you have one transaction can be categorized three different ways by clients depending on their needs. So for example, if you want like free products given away, is that just a part of your cost of goods sold that you wanted? Do you want it as a marketing expense because you're using those free products to get your name out? So for our clients, it's typically a marketing expense. But that's something that just nuance client to client. So depending on that, we'll make adjustments. And then going forward, every single month, it's just you're going to get your financials within 7 days. That's kind of where we try to set ourselves apart because the typical client or accountant is going to send it out within 15 days. As long as you communicate with us on time, we'll get it sent out in half the time, a little bit less than half, with all the reports that you need. And then any questions, of course, just talk to us, let us know,
Yeah.
and we'll get
It
it
sounds like you
sorted out.
guys are really boutique. So it sounds like you tailor the experience based on the customer's needs, including the different reports they might need compared to,
Yeah,
somebody who's making a manufacturer, making shampoo might be different from somebody sourcing dog treats, right?
yeah, exactly.
Beautiful.
You're right.
And do I work directly with you? Do we work with your team? Like what is who do we work with at S&G?
So at S&G, it's my partner Daniel and I. So you're right. We're boutique. And the reason we're able to do that is because we focused our niche down to e-commerce. So I have a pretty, I know I'm gonna have to do this
Yeah,
for you,
you
and
got the
that's
scope.
the riches are in the niches, right? So if you can get
Yeah,
that streamlined process, that makes it a lot easier doing the books for different clients month to month.
I like
So
it.
yeah, me and Dan get your
Cool,
books together.
man. Dream team, guys. I like it. I like it.
Uh,
All right, I got my final question for you before I let you go. This was really interesting. We talked about Nexus, we talked about taxes. I
yeah,
got some good tips, even financing. So I know you mainly only do bookkeeping and accounting, but we did cover a lot today. So
yeah.
hopefully my audience feels the same way. But I do like to ask you to pull out your crystal ball and talk about the future of e-commerce and technology. So with that being said, as automation and AI continue to shape accounting tools, how do you see technology changing the future of bookkeeping for e-commerce founders over the next year or two?
Yeah, I know we touched on this before the podcast, but I think that everyone. I'm an accountant, so I'm in the accounting space, and everyone's telling me, "Dude, why are you an accountant? In 5 years it's going to be a dead industry because of AI." And I tell them, "Listen, AI can do a lot of stuff. Don't trust me. I've tried to do some tax research with ChatGPT. It doesn't work. Especially now with Trump's big beautiful bill, 800 new pages of tax code. It's not going to help you, right? So the thing with AI that I use AI day to day for business, and the thing that I like about AI is that those monthly categorizations. Every single month you're going to have 200 transactions that we need to categorize in QuickBooks Online. AI can help you do that, but the issue is you still need someone who understands the numbers and can easily spot a discrepancy from month to month. So if I notice office expense, whatever account is 400 this month, but in the next month it's 4,000, something's probably off. And that's where you need that second set of eyes because yeah, AI can help streamline, the basic day-to-day bookkeeping works like categorizations and reconciliations. But if you don't have someone that's able to analyze and actually give you insights and tell you exactly what to do based on that information, then your books are going to be wrong, number one, for the most
Mhm.
part. I know AI is getting pretty good, but there's always going to be issues. And number two, it's not going to be able to tell you exactly what you need for your industry. Since obviously we work with e-commerce, we've seen a thing or two because we've been around the game.
Yeah.
6 and 7 figure brand owners, different types of Shopify, Amazon, a couple Etsy sellers in the future potentially as well. So that's, I think, where AI can't really step in for now. You need that expertise from
That's
someone
right.
else.
Here too. And the similar sentiment in the marketing space. But at the end of the day, it's a tool and it's going to make our jobs a lot easier. But to your point, there's still a human master. There's still somebody who needs to
Yeah.
look at it, double check it, and make sure that it's in fact accurate, and to be held accountable because ChatGPT makes tons of mistakes, but
Oh, man.
I
Yeah.
can't fire my ChatGPT. I can, but I
Yeah.
won't.
Yeah.
Not the way it works. So, Arthur, thanks for joining us today. Before we wrap up, can you let our listeners know where they could find you online and if you got any special promotions?
Yeah, for sure. Our website is just S&G, so ANDG bookkeeping.com. You could just search up Arthur Glinkin, LinkedIn. I'm on TikTok, been making those TikTok shorts and
Nice.
YouTube long form videos. So that's where I'm at, primarily TikTok and YouTube. But if you go on our website, sngbookkeeping.com, then there's a couple things that we have. Number one is I put together a checklist for based on our actual clients, 6 and 7 figure clients, a monthly bookkeeping checklist. So if you're not ready to outsource the bookkeeping to us or another e-commerce accountant yet, then that checklist will give you 80% of what you need to do because, like I mentioned, there's so much nuance in the e-commerce space and each business is a little bit different. I can't get everything, every monthly step that you need to do, but it'll get you 80% of the way there for your monthly bookkeeping. Categorize your accounts, make these entries, account for depreciation if you do have assets, that sort of thing. So you can do that, use that checklist to actually do your bookkeeping if you're still in that position where you want to do it yourself. And then the second thing is on the website, we're currently running a free QuickBooks Online audit for e-commerce owners where basically you and I would just sit on a call and I'll break down your books one-on-one because like we mentioned, there's a lot of things that can go wrong. So I'll literally point out exactly on your financials, this is where this number is wrong. This is how you can fix it. And then based on that, obviously, if you think it's something that's too difficult, you don't want to deal with, then that's where we can step in. If not, you just got yourself some free advice. And on that call, I also give you a free monthly bookkeeping checklist, but it's tailored specifically to your business. So once I actually get an understanding of your business, I'll send that over to you for free as well. So yeah, that's what we're doing for now.
Lots of e-commerce deals. So you guys, if you're struggling with your books, if you're not happy with your bookkeeper, please check out Arthur and S&G S&G Bookkeeping, excuse me.
Bookkeeping,
And
S&G
we'll
bookkeeping.
S&G Bookkeeping. We'll have all the links in the show notes. So wherever you're tuning in, Apple, Spotify, or directly on our website, we'll have the links there. We'll have Arthur's LinkedIn as well as the website and any of the checklists. So feel free to check it out there. Arthur, man, thanks again for hopping on. Have a great rest of your day.
Yeah, appreciate it. You as well.
That wraps up today's episode of Selling on Giants with Arthur Glinkin of S&G Bookkeeping. If there's one thing to take away, it's clean books equals clear decisions. From understanding your sales tax nexus to tracking tariffs and true landing costs, accurate financials are what separate the brands that guess from the brands that grow. Arthur also reminded us that automation tools from QuickBooks to Webgility can make bookkeeping easier, but they'll never replace the human expertise needed to interpret the numbers and make smart calls for your business. If you'd like to connect with Arthur, visit sngbookkeeping.com. That's SANDG bookkeeping.com, or find him on LinkedIn, YouTube, or TikTok at SNG Bookkeeping. He currently is offering a free QuickBooks Online audit for e-commerce owners and a monthly bookkeeping checklist for you to download right now on his site. Thanks for listening to Selling on Giants. Don't forget to like, follow, or subscribe wherever you're tuning in. And until next time, stay classy, people.